The other day, I was in the car with my 17-year-old son. I have 4 children. He is my youngest. He was driving, I was a passenger, and I told him I'm traveling for a few days for work. I have to give a big presentation at a conference. Silence. And then he asked me, he said, "What are you presenting on?" And I said, "Goals-based investing." Silence. It's hard to get a conversation with a 17-year-old.
Yes.
Right? You have. But after about a minute, he asked me a question. And he said, "Isn't all investing goals-based?" Which I thought was an incredibly astute question for a 17-year-old. And my response back to him was, you would think it is, but the way that the industry is built is that not all investing is actually goals-based. I have been in this industry next year for 30 years. And what we're going to talk about today is a pioneering approach to actually deliver goals-based investing, which is transforming the way that the wealth management industry operates. We're going to talk about some of the challenges that exist, and I'm going to offer for you a solution that I firmly believe is going to profoundly change this industry for the better, which is a pretty bold statement to open up with. This trend towards goals-based investing is real. All of the data suggests it. Today, roughly 30% of financial advisors deliver some form of goals-based investment management. That means a lot of different things to a lot of different people. If we look out by 2030, McKinsey suggests that that number is going to go up to 80%. What is driving this number is clients. In every single aspect of our lives, we demand more personalization, from the way we watch our movies to the way we order our coffee. And it only makes sense that that's going to happen in the investment landscape. And it's happening very, very quickly. What we find, and this is a survey that came out of Orion the other day, is that advisors that focus on personalization for clients grow faster. Because that's what clients ultimately are asking us for. Now the challenge is this. When you look at how, quote, goals-based investing is being delivered today, the predominant element is the risk tolerance questionnaire. The risk tolerance questionnaire has become the de facto sole piece of information that drives asset allocation and ultimately portfolio allocation. We ask a bunch of questions. How much can you lose before you lose sleep at night? That downside number then gets equated to historical market returns. And someone says, I can lose 30, and they look across the chart, and you get mapped into a 60-40 portfolio. What's the problem with risk tolerance questionnaires? They don't account for everything that matters. They don't actually account for your client's goals. They don't account for all the elements that you actually need to build a truly personalized, goals-driven portfolio. Time horizon, cash flows, current assets, legacy objectives. Yes, risk profile is part of the equation. The other thing about risk tolerance questionnaires is your response from clients depends on where in the market cycle you are. They answer differently in a bull market versus a bear market. That risk tolerance questionnaire drives the asset allocation, and then you're told to stay the course. It's static. It doesn't adjust with your goals. It doesn't adjust with market conditions. And so what we have is we have lots of clients. I'll use 2. We call this the 2-client problem. 2 clients, different ages, different asset bases, different cash flows, different savings rates, and yet, if they take the risk tolerance questionnaire and they answer the same way, they end up getting put in the exact same portfolio. Intuitively, this does not make sense, yet this is the framework by which our industry operates. And so what happens is, as we talk with lots and lots of advisory firms, What they tell us, anonymously of course, is that 90% of our clients are all in the moderate model. And we know that is not the right answer. The other reality of risk tolerance questionnaires is everybody knows that it's incomplete. We do surveys of our advisors all the time. Do you believe that risk tolerance questionnaires adequately captures a client's true risk preference? 96% say no. There is nothing in this industry where 96% of advisors agree on something. Do you think risk score should be the main factor of driving a client's asset allocation and ultimately their portfolio? 87% say no. So it's a problem, and we all know it. And the question is, how do we move beyond and how we deliver something better? Nebo Wealth is a company that is and has become a leader in true goals-based investing. Since we launched these solutions about 2 years ago, you can see we've won a whole bunch of industry awards. You heard some of the quotes. Bob, you're right in the room. I don't like to say this about us, but you can say it, so I'll just read the quote. Nebo Wealth provides advisory firms with the quote, holy grail of portfolio management. That's a strong statement. Again, we don't like to describe it that way, but we thank you for the quote. This is the cornerstone of the process to actually deliver a true goals-based experience for your clients. Number one, we have to capture the essential elements of a client's investment policy. You see them up there. We have to understand what your goals are. We have to understand your time horizon, your cash flows. Yes, risk tolerance comes into the equation. We want to understand liquidity needs. So we take the key investment policy inputs into our process. We can take cash flows directly from financial planning tools for those of you that are using financial planning. I would argue that goals-based financial planning is growing dramatically. But that's not the same thing as goals-based investing. There's a disconnect between those two. My colleague will talk a little bit about that. From those inputs, what we do is we calculate what the client's wealth path should be. Let me come over here. You see that red line in the middle in that chart? The top of that red line is your personalized wealth path. How much money am I going to need a year from now, 5 years from now, 10 years from now, at every point over my time horizon so that my financial plan works? That red line, that wealth path is personalized to every single investor. Based on what? Their goals, their time horizon, their cash flows, the essential elements. That red line, that wealth path, becomes a client's personal benchmark. In this process, we're also going to move beyond measuring performance relative to the S&P or some benchmark portfolio. Every client has their own personalized wealth path. From that wealth path, what we do, and the thing that we're winning all these awards for, is we do wealth optimization. In essence, what we're saying is, given today's market conditions, given the forward-looking expected return of asset classes, given that wealth path that that client has, what's the optimal portfolio that you should own to minimize the risk that your wealth falls short of target? Risk isn't volatility. Risk isn't standard deviation. Risk, in a very intuitive way, is, am I going to have the money I need at every point across that wealth path for me to maximize the likelihood of my financial success? Now, that portfolio that you see, that optimized portfolio, and this is the tools that we offer to advisory firms to deliver, can be built upon anything. Let me say that again. That can be built upon anything. Any asset class, from traditional markets to alternative markets to private markets. That can be built upon things like outside business interest, real estate holdings. We're getting firms coming to us and asking us to put in things like annuity structures. This is a flexible, open architecture framework that is truly goals-based, that allows you to customize the experience based on your preferences as the advisory firm. Because every advisor has a philosophy, has a view. Dare I say, all of you have an identity as a firm when it comes to how you think about investing. And so we can take your philosophy, your identity, and just bring it into this process. The other thing that flexibility provides is the ability to implement using any type of strategy that you want, whether it be mutual funds, ETFs, standalone securities, and the like. So goals-based, fully open architecture. And the unique thing about the flexibility is that we can handle really complex client circumstances. We can, in essence, build a bespoke portfolio for every single one of your clients. Now, that may sound aspirational, but we can do it today. And we can do it easily, and we can do it efficiently for you. And we can give you the tools for you to power it and run for yourself. But 30 years in the industry would tell me that not every client necessarily needs the quote bespoke portfolio. We segment clients. And so what we have done is we have taken this goals-based investment framework and we have applied it to the model marketplace. I'm guessing you as a firm have model portfolios. Most do. From conservative to aggressive, you have your own models. We can take this exact same framework, deliver it, and have Nebo be the tool that you use to match the client to the optimal model. We can take this framework of model selection and then apply it to a much broader universe. Last week, we published an article called The Paradox of Choice. More options don't always lead to better outcomes. The model marketplace has emerged where every asset manager is loading their models onto the model marketplace. Different marketplaces compete with each other. And so the thinking was, the more models I have, the better my marketplace is. The challenge is now what we call the paradox of choice. There's so many choices, I can't even make sense of it all. Too many choices leads to decision fatigue, and the underlying core, let me come back to it, is the way that they get to the models, if they can sort through the hundreds of choices, the primary driver of how the model is selected is based on what? Performance and the risk tolerance questionnaire, which I would argue is woefully incomplete. The next generation of model marketplace is number one, goals driven. Number two, we believe it's going to be powered by tools like Nebo Wealth with this wealth optimization framework, where every client has their own personal wealth path. We'll run the optimization. We're mapping all of these models into this framework, and what we'll do is help you determine the optimal model portfolio amongst your own firm models or amongst an entire model marketplace. What I just laid out for you, and if you're interested for a copy of this, the Scantron is up there, we'll take you to our website. I think this is a big idea. I've been in this industry, as I said, for almost 30 years. I have never been more excited about a way to think about not only helping advisors, but ultimately helping clients through improved outcomes. Taking the decision fatigue of this just myriad of models and bringing a much better, more robust framework to actually deliver on true goals-based investment management. What I'm going to do is I'm going to bring up my colleague, Martin Tarley, who's going to share with you an announcement that we brought out yesterday. And there's no better place, Martin, to do it than here at T3.
Well, thank you, Adam. Thank you, Adam. So the big announcement, get the clicker working, is the launch of our enterprise platform. This is our third year attending the T3 conference. So we presented 2 years ago. We've had amazing experiences at T3. So the first experience we had was a tremendous experience. The experience we had last year was actually a better experience than we'd had the year before. And even so far, our experience this year is even better than it was last year. So we want to thank Joel and the other members of his team for hosting a tremendous event. When we first introduced Nebo 2 years ago, we really focused on articulating our big idea about risk. And that big idea is actually a very simple idea, which is that risk is, for the asset owner, is that they don't have the money they need when they need it. It's not the volatility of their portfolio, it's they don't have the resources they need when they need it. Tied to that big idea about risk is a big vision that we have, and that vision is that we build goals-based portfolios for every investor to maximize the likelihood that they achieve their goals at every stage in their life. So this process is not you do it once and then you never do it again. You have to do it on a consistent basis so that you're accounting for market conditions and you're accounting for how the client's life changes. So the question is, why did we go enterprise? Up until about a year ago, our primary focus was really building a web-based application for RIAs to deliver this kind of capability. So why have we launched an enterprise platform? The reason that we've launched an enterprise platform is really we were getting demand. The demand was coming from a very wide range of industry participants. And they came to us and they said they want to preserve their workflows. They want to preserve the capabilities that they have in their systems, but they're really attracted by our framework, by our thinking, and they want to deliver the kind of goals-based experience to their clients. So that motivated us to essentially make all of our core capabilities available via API. We've also been working with a number of other industry participants, and one of the keenest observers has articulated the view that Nebo will be the Stripe of portfolio optimization. For those who are not familiar with Stripe, Stripe is an API-enabled online payment system. So the vision is that Nebo becomes an API-enabled portfolio optimization engine that will power the next generation of goals-based investing. So theme one of our platform is API enabling portfolio optimization in a manner analogous to how Stripe is doing it for online payments. The second key theme ties into what Adam was talking about model management. So at the same time that these organizations were coming to us and saying, we'd like to access your capabilities via API, we started hearing from large RIAs and large broker-dealers that they're struggling with model management. There's been an explosion of models, and the operational and decision complexities of that motivated us to explore whether or not we can incorporate a goals-based optimization framework to help get our arms around this explosion of models and rationalize that entire process. So this wide range of demands coming from industry participants all the way from financial planning firms to performance reporting firms to asset management platforms has sparked the question in us, why is this wide range of firms coming to us and asking for a solution? And the answer is because we think that the fundamental problem of the gap between planning and investing is reverberating across the industry. So a wide range of firms are seeing the effects of this gap between the plan and the portfolio. Advisors they do a lot of work on the planning side, they do a lot of work on the investing side, but the connection between the plan and the portfolio is just not there. How do we know that? We know this is a problem because we're out there talking to the advisors all the time and they're telling us. We also run these surveys where we ask them, do you observe a gap between planning and asset management? And a whopping 89% of advisors are telling us that they observe this gap between planning and investing. Now that's not quite the 96% that Adam cited, but it's hard to imagine 89% agreeing on much, but there you have it. The other thing that we ask advisors is, do you struggle aligning your client's financial plan with the investment portfolio? And 58% of advisors tell us that they struggle aligning the plan with the portfolio. That word struggle is a strong word. What it indicates is there's a negative emotional response to this disconnect between the plan and the portfolio. So we all know that this is a problem. And what's really interesting about it is that the industry has known this has been a problem for decades. So this is a quote from a book by Charlie Ellis. Charlie Ellis is the founder of a large investment consultant firm, and he published a book in the 1980s. And in chapter 4 of the book, he talks about the paradox. So the paradox is that there is a paradox haunting investment management. The paradox is that funds with very long-term purposes are being managed to meet short-term objectives that may be neither feasible nor important. And they are not being managed to achieve long-term objectives that are both feasible and worthwhile. In these two sentences, you have the essence of the gap between the plan and the portfolio. This is the essence of the risk tolerance problem. So, we have a problem that has existed for decades. Everybody knows about it, and it's reverberating across the industry. Nebo, with our view on risk as not having what you need when you need it, and our portfolio optimization process is the key link that is connecting financial planning and portfolio management and powering goals-based investment. And if we go back to our enterprise solution, it's this goals-based optimization engine that is enabling the connection between the plan and the portfolio. And the key element here is we see Nebo to drive, to power the next generation of model management. So all of this is a bit abstract, and the question is, so what? So recently, we surveyed our advisors, and the results are very consistent with the results, the recent results by the T3 survey from Bob and Joel. The key question that we ask them is, on a scale of 1 to 5, does Nebo improve the quality of your advice? 94% of advisors say, either 4 or above, that Nebo improves the quality of the advice. Advisors are in the business of providing advice. The second question that we ask is, does Nebo boost confidence in your investment process? And 100% of respondents say that Nebo boosts their confidence in their investment process. This boost in confidence is a key element because it's the lack of confidence that is causing the struggle that the advisors are reporting to us in the prior survey that I cited. The last thing is, and this is what we've learned from Michael Kitces, is that advisors that are more confident grow faster. So 88% of advisors said that Nebo helps position their firms for future growth. On the client side, 83% said that Nebo helps improve the client outcomes. This is a key consequence of aligning the financial plan with the portfolio at every stage of life. Finally, greater confidence in the client's financial plan leads to improved conversations between the client and the advisor. And additionally, greater trust between the clients and the advisors.
Yep. All right, I'm going to wrap up. Can you hear me? Are we good? You're good. Martin's been working on this for 10 years. He's very, he won't tell you, but Martin is brilliant. Well, we just described this concept of goals-based investing, building a personal glide path. We use the word optimization. There is a lot that goes on under the hood. This is the thing that's winning us these awards. And Martin's been working at this for 10 years. It's a very passion project. What we've done is we've made it easy to use for advisory firms that want to deliver more personalized, goals-based solutions. We tend to gravitate, or firms gravitate to us, I should say, when they're looking to grow, either organically or through acquisition. Because ultimately the question is, how do we do and deliver a far more personalized experience, more personalized advice for every single client? But how do we do it with enough scale to operate our business? Now, this transition to a goals-based platform, this transition to using tools like Nebo requires some work. It's change management to some extent. What we do as a team, having been in this industry for many, many years, is help firms make that transition. But I will tell you, based on what they tell us, is that it's worth it. And those firms that generated those survey results that Martin just showed you tell us that what we're doing is special and unique and differentiated. And those words help them stand out against a very crowded marketplace. And those firms that use tools like Nebo grow faster. And ultimately, that's the goal. Can we help advisors better serve their clients and improve outcomes? I'll end with this. If we piqued your curiosity today, just a little bit, come and visit us. Our booth is literally right outside. We have one of those kiosks there. The little Scantron thing you see there will take you to our website. You can download a lot of the papers. And if you'd like to book a demo and just sort of explore what the platform looks like or how it can be incorporated into your existing workflow, we would love to talk with you. So thank you very much for your time today.